Welcome to another S&P 500 Trade Watch analysis. Today is September 20th, 2022. This is going to be a brief update on the SPY, QQQ, IWM, Apple, and Tesla on the day before the FOMC announcement. I just want to give you an update on the scenario that we cover on the weekly Trade Watch video. So stay tuned. Now, starting off with this sentiment chart here with the VIX and also the put-call ratio. Before we take a look at those two sentiment indicators, just point out this S&P 500 cash index is now 1.13% today, down almost 44 points. And the VIX is still sitting inside of this 2030 zone and closed at 27.16. So again, it doesn't show that the market participant are panicky, fearful. Okay? They are fearful, but they are not panicking. It is not spiking up like into the 35 or the 40 level. And also the put-call ratio, even though earlier, like end of last week, it was up above 1. And you can see that today it actually came back down to below 1 and it closed at 0.92. So although it is not below 0.75, the market participant are getting a little bit more bearish, so they are putting a lot of hedges on, and that's why we see the put-call ratio a little bit elevated and above that 0.75 level. So basically, it is on risk off with a little bit more focusing on the hedging. Also, looking at the up-down volume ratio today for the New York Stock Exchange, with a 1.1% decline, it actually is not bad. We're only talking about a little bit under 7 to 1 in favor of the down volume, but the advanced decline, there are more declining issue than advancing issue. The declining issue outnumbered the advancing issue by 2,116. So we are getting a broad market type of a sell-off today. And here on the New York Stock Exchange, new high, new low, we are seeing a little bit more stock making new 52-week low. We have 397 stocks made new 52-week low today versus only 14 stocks made new 52-week high. And here we see that the S&P 500 on closing basis is continuing to come down along with the cumulative advanced decline. Remember earlier we saw a little bit of a positive divergence and we're expecting a bounce, and we got that bounce yesterday. So now today is back in sync. And here's the Nasdaq. The Nasdaq 100 is it was down 0.85% or just a little bit over 101 points. And also I just kind of put this in a little bit, treating this little bit of a bear flag and do a major move and project this down to about 10,914, and that will go below the June low. And I explain to you later on why I did that. And also looking at this up-down volume ratio, the up-down volume ratio in the Nasdaq was about 2.5 to 1 in favor of the down volume, and also the advanced decline showed that it is also a broad market type of a decline today, with 2,127 more declining issue than advancing issues. And also the Nasdaq, the number of stock making new 52-week low, it's also been coming up a little bit in the recent day. Today it closed with 559 stock made 52-week low versus 28 stock make new 52-week high. Now here looking at the Nasdaq cumulative AD line, you notice that, remember last time I was talking about that if the AD line get below the June low, then that would be a concern. Well, today actually dipped below. And also you notice that the Nasdaq 100 is still well above the June low. So, and that's the reason why I put that bear flag projection on the earlier chart, because we're not basically looking for support and resistance on the cumulative AD line. It doesn't work that way. This is not a tradable indicator, right? So you can't not trade it. And if somebody trying to manipulate this indicator, you gotta take a hell of a lot of coordination to manipulate the number of advancing issue and the number of declining issue to move this curve to where they want it to be. So I'm not saying that it's impossible, but it is very improbable someone would do that because it takes a lot of effort. I don't know what kind of computing power that take, and also the monetary backing to do that. So in any case, the right now it dipped below the June low, so that is a concern. We do expect this Nasdaq 100 will most likely come down a little bit more, and that is a tech-heavy index. So look for the possibility of the rate increase. We know there's going to be a rate hike. It's just a matter of 0.75 or 0.5 or 1%. So, but in regardless, it seems like the tech is going to take the brunt of it on the downside. Just by looking at the advanced decline right now, seems like a lot of stock is already pricing in, try to price in that rate hike, and to sort of anticipate that. So again, we're going to see if there's a negative reaction. We probably will likely see that the Nasdaq 100, the Nasdaq index, will get a little bit more weakness than the S&P 500. Now let's take a look at the SPY. Remember last week I talked about the possibility of the price come up and maybe kind of chop around here and waiting for the Fed announcement, and then either push up or push down. Or the other way is that it could come down and sit around here and then push back up or come down. Right now, we appear to be waiting for the price to either come up into this high volume zone and push us up to the upper range of the weekly expected move, or it could just come down to this high volume zone and push us down into the lower range of the weekly expected move between 374 and 372. So those are the scenarios that we're watching now, because the price basically been sitting around in this low volume zone here. So we're just waiting for this move here. And for the QQQ, we're also looking for it to basically sort of chop around here, waiting for the Fed. And if the Fed announcement turn out to be a positive reaction, then we're basically looking for this thing to come up and move up to this upper range of the weekly expected move between 302.50 and 335 or so. But if it is negative, then we expect it to come down to this high volume zone, somewhere around this 284, 283 area, and push us down into the weekly expected range, lower range at between 278 and 275. So right now, that's basically what we are looking at, the possibility of pushing down or pushing up. So depending how the rate announcement is being taken by the market. And here's the IWM. The IWM basically was looking for to kind of chop around between this area here, and then the rate announcement, after the rate announcement, it pushes up to this 182.50 area, and then back up into this upper range of the weekly expected move between 187 and 185.50, or basically chopping around, negative reaction, come down to this low volume zone here, and then pushes down to this lower range of the expected move between 172.50 and 171. So we're essentially just waiting for the announcement for the either the upside move or the downside flush. Now let's take a look at the Apple. I also have the relative strength chart for Apple. This is in relative to the S&P 500 index. You can see Apple, the relative strength is quite strong recently. And matter of fact, we were basically looking for Apple to maybe just chop around right under this edge of this composite value area. Then on a post FOMC reaction, then we see it maybe possibly push back into this area and come up to this upper range of the weekly expected move between 158.25 and 157 or so, or come down and dip down into this 144.50 and 142.50, this lower range of the expected move. But as you can see, the Apple been quite strong, and actually today it moved into this upper range. So what should we expect tomorrow after the rate hike announcement? Well, if it is going to be negative, then we expect Apple to come down and dip outside of this value area and push us down into this high volume zone here between 148. Then look for the possibility of coming down to this 144.50 area, this lower range of the weekly expected move. But if it's positive, then we could see Apple possibly push up and get into this, this high volume area into this 164 zone. Okay, so just keep an eye on that because there's this high volume in between these two low volume area. Now, also Tesla been quite strong as well relative to the S&P 500. So you can see from the relative strength chart here, been moving up, so that indicates that it is outperforming the S&P 500 index. And also, we're saying that we're looking for Tesla to kind of chop around at this upper edge near this value area and also this high volume zone. So right now, it seems like it is kind of just waiting here. Yesterday it pushed up here, and today it's kind of chopping around in here and try to peak up above this value area. So we're basically looking for Tesla either pushes up to this 320, 330, or up at this upper range of the weekly expected move, or come down to this 288 area on the lower range of the weekly expected move on post FOMC announcement. So those are the updates for the SPY, QQQ, IWM, Apple, and Tesla for the post FOMC scenario. I hope you find this video informative and useful, and be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.